What's going on, everyone? Welcome to the KIRIO House podcast. My name is Craig Kiriokis. This is
Mercedes.
Merle. And we are joined with Rob from Gateway Mortgage. Robert, how are you?
Fantastic, Craig. Thanks for having me.
I just messed with Mercedes because she was going to correct me, but then I said Robert.
Yes. Robert Riggs is his full name, and he's amazing.
Thank you, Mercedes.
Love it. Rob, thanks so much for joining us. I really appreciate you carving some time out to come sit down with us and run through some things. It's been interesting times recently.
We've been having a blast in the real estate industry for the last few months, haven't we, Craig?
It's been a joy. It's been a joy. So I'm sure you're aware that there's a rumor mill and there's some gossip going around that the economy is collapsing and housing is falling apart, and there will no longer be houses to buy or sell. It's just all going away.
That's right. Completely gone.
Yes.
None of us will have homes.
Yeah.
They're taking away the houses. But in all honesty, there's a lot going on right now with interest rates and the economy as a whole. And so we wanted to carve out some time to chat with you guys and just kind of help put all of this in perspective and help you guys wrap your heads around it and just explain what's actually happening. Yeah. So before we get into that, Rob, you want to tell everyone a little bit about yourself?
I'll tell everyone a bit about myself. So yeah, Robert Riggs. I grew up in Edmond, Oklahoma, born and raised. Decided to go really far outside of my comfort zone and went all the way up to Stillwater, Oklahoma for college. Go Pokes.
Look at you.
Maybe lingered in Stillwater for just a little bit too long after graduating with a psychology degree of all things.
Okay.
Yeah, right. I know.
I had no idea.
Yeah.
Surprising.
And, well, that's fair. We had many paths through college.
Yeah.
Not all 18-year-olds know exactly what they're meant for in their life at that age. But yeah, graduated and then started playing drums in a band with a couple of good friends of mine while I worked in a restaurant. And then
is this where you had the long hair?
Yeah,
this is one of the periods where I had hair down to here. Yeah. It's been about 3 or 4 phases of life for me.
Insert picture.
Yeah, exactly.
Hopefully we'll have a picture for you guys.
But then, when you're 24, 25 in Stillwater, you're pretty ancient. So 2 of us decided to move back to Oklahoma City. Started doing some food and beverage managing at Gaillardia Country Club. Just kind of fell into that, which led me somehow into the mortgage industry.
Interesting.
Yeah.
That's an unusual transition from the food and beverage industry to lending.
Yeah, well, the country club was great. I loved it and all the connections there. I knew it wasn't probably the end goal dream job for me, but made some great connections there and wanted to use those to get to the next thing, which happened to be lending.
Very nice.
Awesome.
Well, you're kicking butt, taking names, doing all the things.
Trying to.
And you're doing a great job. And I'm going to refer to my notes here so Mercedes doesn't get on to me. So you spent the last 2 years as a loan officer or a loan originator.
Yeah.
Okay.
More than 2 years, though, right?
Has it been more than 2 years?
Yeah, it's about 2 years originating from my own team, but I've been in the industry about 6.5 years.
Okay.
Yeah.
A lot of experience. You've seen a little bit of the cycle.
Absolutely.
Okay. And so speaking of cycles, 2020, 2021 was just an unprecedented time in real estate.
Yeah, it was a dreamland where you got to be order takers for 2 years.
Yeah, and money just printed, and it was great.
Yeah, absolutely.
Literally, they were printing money.
Yeah, they were printing a lot of money.
True.
Actually. So I actually just learned this, and it blew my mind. So in 2020, 1/5 of the money that has ever existed was printed.
Yep. Mind blowing, isn't it?
You almost
I don't know why they didn't
fathom
think that was problematic at the time.
Yeah, right?
Everything has its consequences on the back end.
Yes.
Welcome to your consequences.
Yeah.
Which we'll get into.
So what are you seeing from the mortgage side of things that's different from maybe it was in 2020 and 2021? I mean, they're obviously drastically different markets, but why? Like, what exactly is happening right now?
Yeah, so kind of at the end of 2019, we were already at historically low interest rates.
Okay.
My wife and I bought a home in 2019, around November, I think, which was kind of just a lucky time to buy, it turns out.
Yeah.
But I think even then we were in the low 3% on a 30-year mortgage.
And that was in 2019.
That was in November of 2019 that we bought.
Okay.
From there, rates were historically low as we entered into 2020. And then I think we all kind of know what ended up popping up around March of 2020.
Right.
And a global pandemic kind of got delivered to the world here. And then from there, rates kind of just kept trending lower and lower. In 2020, we were seeing some rates in the twos, at the very least, the low threes, which was crazy. What a time to be alive.
Yeah.
So in the twos, which really is mind-boggling to think
Yeah.
about.
Yeah.
2% is basically free money.
Yeah, that's what you're financing a car at.
Yeah, that's
I think.
wild. You're probably right.
Yeah.
Yeah. And so, rates have ticked up. We're in a higher interest rate environment right now.
Yep.
But that doesn't necessarily mean that you should stop buying or stop trying to buy.
Exactly.
If you're trying to buy a house, or if you're on the other side of the transaction and you're trying to sell, it doesn't necessarily mean it's a bad time to sell.
Yeah.
And so one of the things that we want to do is kind of dig into that a little bit today and kind of explain how you can end up on the better side of things on both sides of that transaction.
Absolutely.
So, if you are trying to buy right now, what's something that you can do, or where does one start to kind of position yourself to be in a good spot buying?
I think the first place to start is you find a great real estate agent and a great real estate team, like the KIRIO House team. But from there, right? Yeah.
Ding.
Find a good personality fit. Find people that you think are really going to be great advocates for you and your family through the process.
Okay.
From there, trust them.
There we go.
Put some trust in them, right? They do have your best interest at heart. They aren't in this to serve themselves. They are in it to serve your family. And listen to a little bit of their guidance. Do a little bit of your own searching. But after you find that trusted real estate agent, and before you go shopping for a house, meet with a lender.
I think that's very smart.
Really, step one in the process, I would have said, is get pre-qualified. But no, find that trusted real estate advisor first. And then from there, right after you've done that, meet with a lender and start thinking about what's a comfortable budget for your family. Kind of start thinking through the numbers yourself. Do a little bit of budgeting. Maybe get an app if you don't have one, if you haven't looked at any budgeting, but start thinking about, what a comfortable monthly payment is for you and your family. And then meet with a lender. And I think it's important to not only apply, we want everyone to apply, right? We don't want people sitting on the sidelines. If you're interested in buying a house, at least have someone take a look at it. Yeah. And then from there, find some time, make some time to go sit down with a lender, walk through the numbers, ask about different loan types, make sure they're showing you different loan options that you may qualify for. And then from there, you get back with that trusted real estate advisor and you go out shopping for houses.
Yes. And that's really how it should be going, right? You should be getting your loan squared away, finding out how much you can get qualified for, what's comfortable in terms of monthly payment and down payment, cash to close. And then you start looking at houses that fit inside that box.
Exactly.
But people are a little more likely to start in reverse. They want to get on Zillow or whatever and start searching for a house. And
it's fun.
It is. Yeah. You go look at houses and then you find one that you fall in love with.
Right.
And you're like, ooh, how do I buy this?
Right. And it can be hard. Everyone wants to shop for those luxury houses, right? It's fun to click around on Zillow. But before you really go start looking at houses and seeing them in person, it's so important to know what your budget is, the price range you should be shopping in. Because the truth of the matter, I think, Craig, is that, if you go out there and you look at that $400,000 house, but really right now you should be closer to that $325,000 house. It's hard to forget about some of those features of the $400,000 house.
Definitely.
Yeah.
Definitely.
Have you ever seen that little thing that is getting installed in newer homes right next to the sink for your glasses, like your wine glasses?
Oh, like the beer clean system almost. Yeah.
Oh my gosh. Do you have one of those, Mercedes?
No, I don't.
My 1953 home does not have one of those either, believe it or not.
Mine doesn't either. But
I think it's like a set with a sink. It's like a brand new sink. Yeah.
Okay.
It's super cool. Have you seen it? Has that, and then it also has like the special water that comes out the side of the. Anyways, I can't even describe it. I'll have to show it to you later. It's really cool.
But the point is, I would be really upset if I saw that in a house and I wanted it and I couldn't get it. No. I think it's absolutely, to your point, one of the first places I would start is by building my team out, right? Like buying a house or selling a house is a big deal.
Yeah.
And you want to make sure that your ducks are in a row. You've got the right team behind you
Right.
that can help you get this train moving. And like, again, to your point, someone that you can trust, right?
Yeah.
Like you want to be able to lean on them and not kind of have that thing in the back of my head, like, are they trying to get one over on me? Like,
Right.
Yeah.
you should feel confident that the people that have your back are working in your best interests. And I think all of us are aligned in that philosophy.
Yeah, I couldn't agree more, especially if you're a first-time home buyer.
Yes.
There's a lot that goes on through the home buying process. It can seem daunting, but really it can be boiled down pretty quickly as long as you find those people that you trust. And I'd also say, if you're the family that hasn't bought a house in 20 years, kind of like we discussed a little earlier, Mercedes,
Yeah.
find those people that can really advocate for you and make sure you take the time to review everything with them.
Okay, cool. So once we've got our team, we've got our budget established, we know how much we can spend, we're going to go out and we're going to start looking for homes.
Yep.
And so now when we find a home, let's just say we find a $400,000 house.
Okay.
What are some things tactically that we can do as a buyer to put ourselves in a better position to buy that home in a higher interest rate environment?
Right. And like we talked about, the first thing is know your numbers.
Okay.
That's what this all defaults back to, right?
Okay.
Even though we are in a little bit of a higher interest rate environment than maybe 2020, that doesn't mean it's a bad time to buy a home. If that monthly payment meets your budget, then let's go ahead and take a look at it. And then from there, that's where your team, your loan officer, your realtors can help come up with some of those strategies to help you make a competitive offer that can lead to some positive things for you. I think you can speak to this a little bit better, Craig, but what was the market like at the beginning of this year? What was it like if you were looking to buy that $400,000 house in early 2022?
You were gonna spend more than $400,000.
Easily.
Yeah.
I actually, so what just came to mind when you said that was a video that I made in February.
Okay.
And the opening hook in the video is like, it's February and the real estate market's still rocking. Because generally there's a pretty substantial slowdown in the winter months.
Right.
December, January, February are all slower in terms of traffic. December, ironically, is actually one of the highest months for closings.
Yeah.
That's because everyone wants in before the end
You
of
want
the
it
year.
before the holidays.
But honestly, to answer that question, I think if you were buying in the beginning of this year on that same house, 400,000, it would look a lot different than it would today. So if 400,000 was your list price, it's probably, and if this was sort of a hot home, right? Like it had a lot of interest, maybe it was on the market for a day or 2 days by the time you got there to see it with your buyer,
Right.
which is wild. But this is another funny thing. With buyers, we knew because of the statistics in the MLS that on average we were going to show a buyer 2 houses,
Yep.
and they would buy one of those houses,
Wow.
or they would write an offer on one of those houses. But that's just because, the first house that you got into that fit your budget, or whatever, you were writing an offer because there was no other way to get a house.
Right.
But one of the downsides of that was you were probably bidding or offering over the list price.
Right.
And so on a $400,000 house, you might have been offering, what would you say, $420,000?
Sure. Yeah.
Okay, so $420,000. Oop, I got the eraser going.
Well, yeah, and you're competing with so many other offers at that time.
Absolutely. Well, and you've got to keep that in mind.
Right.
And it's wild. But when you're writing an offer as a buyer, you're blind.
Right.
You don't know what other people are writing offers or how much they might be writing an offer for,
Right.
which puts you at a big disadvantage strategically, right? And so in that environment where everyone wants the house and you're trying to get it, you're going to throw as much at it as you can.
Yeah. Give it your best.
So, and that's what everyone said, bring your highest and best.
Yeah.
Bring your highest and best offer. Well, let's just say ours is $420,000. So the difference in that right off the bat is $20K that we're going to pay for the house. We're going to pay $420 for this house. And that doesn't include, we still have inspections.
Right.
We still have appraisal. We still have closing costs to consider. But one of the things is with appraisal.
Right.
Because if we were selling someone that $400,000 house and they were paying $420,
Yep.
well, last I checked, the bank wouldn't lend for more than the house is worth, right?
Yeah, we can only lend based off that appraised value.
Okay. So if the house appraises for 400, the difference is that 20,000.
Right.
And so where does the 20,000 come from?
Well, there are a couple options there. The first one that I think you're probably going to work through is people like yourself are going to maybe hit the negotiation table with the other realtor. Am I right in that?
Yes, absolutely. So as a buyer's agent, we would probably ask the seller to cover half.
Okay.
We would split that 20,000 down the middle. The buyer comes up with an extra 10. The seller drops the price 10 or credits the buyer 10, and we meet in the middle. But that's still 10,000, even if you split it.
If you split it, and how often were you truly seeing splits in the beginning of this year?
See, that was the thing.
Yeah.
You weren't.
Right.
Because the sellers had all the power.
Because
The
they
seller's
have,
market.
They have 15 other offers. They can just go find somebody else where they don't have to pay it.
Right.
Exactly. So if you didn't pay this 20 grand, they were just going to put the house back on the market.
Right.
And someone else would.
Yep.
Ouch.
Ouch.
So
Not fair.
not fair at all. And so just in like stark contrast to earlier this year, like let's say now, if you were buying that same $400,000 house, Mercedes, if you were selling someone a $400,000 house and just spitballing, obviously there's a lot more that goes into structuring an offer, but spitballing, like where would you land on that? Would you come in at 420?
Absolutely not. No.
I think the seller would be ecstatic.
Yeah, they would love that. Accept it.
Yeah.
I mean, if it's been on the market, going on maybe 2 weeks, but it's still in decent shape and everything, you'd either offer right out what they're asking or maybe just under. But
Yeah. But you're not going to come in a bunch of money
no,
over the ask
absolutely
price.
not. No.
Yeah. And
Not
so
necessary.
that in and of itself puts you in a better position because now you're only paying 400,000. But then, that the house right now, we don't have a big issue with appraisals coming in under.
Yeah.
So you're probably just going to be paying that 400,000. Then you pay your inspections, your appraisal, your closing costs. But you're saving right off the bat, let's just say 10 to 20,000.
Yeah, and 10 to 20,000 in straight cash that a lot of buyers just don't have an extra $10 to $20,000 lying around.
Yeah. I mean, it was coming from somewhere.
Right.
I mean, they're pulling it out of stocks or retirement or, wherever it's coming from, out of the proceeds from their sale.
Right.
But that money is not free. It's not
Right.
coming from nowhere.
And it's substantial.
Yes. So what I have seen recently is with higher interest rates, a lot of buyers, when they're shopping, are saying, oh, that's too high. They're asking too much. They're kind of saying, well, since interest rates are higher, can we come in at this price or
Right.
Whatever.
Right.
And these prices are substantially less than the list price.
Right.
And you might think on the surface that getting the seller to reduce their list price $10, $20, $30, $40,000 would be a great way to save some money.
Right.
But I think you've probably got some programs where you could use that savings that you might get from the seller and it could have more of an impact on your bottom line.
Yeah, exactly. And, I think an important thing to keep in mind in making these offers and structuring deals like that, Craig, is, if you're asking a seller on a $400,000 purchase price to reduce the price, let's call it $20,000.
Yeah.
Maybe you're going to offer 380 or they bring it down to 380. Well, let's look at how much that's going to save you each month from 400, reducing it to 380.
I mean, under $200.
Yeah. On the grand scheme, it's really not, it's impactful,
Sure.
but it's not always the best solution, right? So we can look at some other things there as well. What's been common for a long time in the industry are discount points. So that's essentially someone, maybe using a little bit more money, or the seller can pay for a little bit as well through some concessions to help bring down that rate a little bit. The established rate is X. Well, let's pay a little bit more money in discount points to get it down, 3/4 of a point, half a point, somewhere in there.
Okay.
And so that leads to some savings for sure through interest rate. But we're also seeing a little bit more of what's called a temporary buy down. And there are a couple ways to do that. And essentially what it is some prepaid interest to effectively help reduce your interest rate for the first couple of years of your loan.
Okay. So now you're talking about like the 3-2-1 buy down or a
Exactly.
2-1 buy down?
3-2-1, 2-1 buy down, these temporary buy downs. And so I think, you as a realtor would be able to, especially if you're on the listing side of things, right? Well, maybe instead of reducing the price $20,000, we look to keep the price where it is and look at a temporary buy down scenario where we can effectively reduce someone's interest rate by, in the case of a 3-2-1 buy down, it would save them 3% in that first year.
Wow.
So if we're in the sevens,
Awesome.
that first year, you're really paying in the fours.
Okay. So that's a huge difference.
Huge.
You're talking about cutting your interest rate 3 points for
Yes,
the
sir.
first year.
3 percentage points.
That's amazing.
Right.
So let's just say, you've got a rate now in the sevens. We're just going to put plural.
Yeah.
Sevens.
Exactly.
Because it changes every day.
It does.
So
Can.
if you get approved for that, let's, in the sevens, and you use the 3-2-1 buy down,
Right.
your first year payment, I'm doing sloppy handwriting today. Your first year, that interest rate would only be 4%.
It would be reduced 3%. So now you're in the fours.
So now you're in the fours.
Yep.
Mm-hmm.
And then the second year, it's still discounted,
Right.
and you go to,
So from there, it would be in the fives. So you'd
you're
be
taking the 2.
exactly year two,
Okay.
you're 2% lower than that market rate.
I'm messing with stuff.
It's on white though.
What? It's messing with me.
There we go.
So then we go to 5%.
Yep.
Or in the fives.
Yeah.
And then the third year, it goes to the sixes.
Exactly.
Okay.
And so that's where the 3-2-1 comes from, right?
So 3, 2, 1.
Right. Well,
Okay.
so really the first year, we're
Opposite.
3% lower. So opposites, but that's okay.
Hey, okay.
Second year,
okay.
2% lower. Third year, 1% lower.
Yes.
That
Right.
makes sense. So there's also the 2-1 buy down.
Right.
Which is similar, but instead of breaking it down for 3 years or discounting your rate for 3 years, you're only doing 2, right?
Nailed it.
Okay, awesome. So how does that work? Like, what's the mechanics of a 3-2-1 or a 2-1 buy down? Like, how is it a different type of loan?
No, so we would do it just through a regular conventional loan. And essentially, it's a fixed rate conventional loan.
Okay,
But there's an added aspect of it, of the prepaid interest.
okay,
Yep.
okay. So and that happens like on the front end?
It happens on the front end, basically, right?
Okay,
So in the instance, it's a $400,000 purchase price. Instead of reducing the price, maybe the seller's willing to contribute to a 3-2-1 buy down.
okay,
So say it's a case like we're talking about, $400,000 purchase price. You're going to put 5% down. So the loan amounts at $380,000.
okay.
In that first year, through interest savings, if it's 3% lower than where it's really locked out, we'll say, we're seeing people save, in this scenario, it's around $730 a month, I think, through that first year.
A month?
A month.
That's insane.
Oh my gosh.
Yeah.
Okay,
Yeah.
so
What would you do with $730 a month?
Yeah, right.
you save $730 a month for your first year.
In this specific scenario.
In this
Exactly.
scenario. And we're talking about
Hypothetically.
a $400,000 house.
Right.
But that's not a small amount.
That's close to $9,000 in that first year.
Wow. Okay, so 9K that first year, and then the second. Do you know roughly what the savings would be monthly on the second?
I think the second year it's in the $500 ballpark. I think just over $500 in this situation.
500 a month, and then what about the third?
The third's around $256. And remember, we started thinking about just reducing the purchase price by $20,000.
Yeah,
And we're thinking maybe we save, a couple $100 a month,
yeah, 200 or so.
which is great. Well, in this scenario, even in year 3 of this, we're saving $250 a month.
Well, and in years 1 and 2, you're saving more than double that.
Exactly. Exactly.
Oh my gosh.
Right.
Okay, so really, like when you stop and think about that, how is that not a no-brainer? So it doesn't make sense if I'm a buyer and using this $400,000 house as an example, if we go into this house and say we want it,
Right.
but it's too expensive. I can't afford that payment.
Right.
instead of asking them to come down 20 grand, if we ask them to credit our closing costs, we can do something like this 2-1 or 3-2-1 buy down
Yeah.
and save a heck of a lot more money.
Absolutely.
And in addition to that, you're not paying this over list price, out of pocket, appraisal gap, everything else, giving your firstborn away. Like, you're not having to do any of that.
Yeah, in the other scenario, you're essentially paying out of pocket more than you would probably need to bring to closing in total with 5% down.
Right.
It's amazing.
It's crazy.
So when you hear people say, like, it's not a good time to buy a house, like, what happens in your head? Are you just like,
Let's have a sit down.
Let's have a sit down. Exactly. Come in.
Can you
Let's
have
sit down
coffee
and work
with me
through
tomorrow?
Exactly. And so that is the first thing that goes through my head. But the first thing really is that I understand it, right? When you're around the water cooler at work and people are talking about how they refinanced their $500,000 home in 2020 to 3% maybe, and you're staring down something that's quite a bit higher than that, it can feel unsettling, right? But two things matter. What's a comfortable monthly payment with your budget?
okay,
And how much do you have saved up to bring to closing?
okay.
If it's still going to put you in a comfortable range monthly and you can buy the house that you want, when's the best time to buy a house, Craig?
Mercedes, when is the best time to buy a house?
Right now.
Right now.
Right now.
Always the best time.
Yeah, what's going to happen with home values over the next few years?
They're just going to continue to rise.
Right.
They're certainly not going down. I think there's there's a narrative somewhere out there that says, like, all these prices are crashing. But when you look at what's really happening right now, like we talked about earlier, 2020 and 2021 were wild.
Right.
And we all knew then that at some point the market would have to correct itself
Right.
and come back to reality.
Yeah.
And that's all that this is the market starting to shift back to a normal market.
Well, that's exactly right. So much of our time in 2022 has been spent in a seller's market, like you alluded to earlier. Now we're seeing some balance come back to the market.
Yes.
I've seen some seller concessions coming in.
Mhm.
Sellers are, getting more and more used to the idea of maybe helping out just a little bit, whether it's with closing costs or any of these other things that we've talked about. So really now, if you were someone who kind of felt like you had to be on the sidelines because maybe were very well qualified, the loan would have been really easy. But when you're up against all cash offers, you're up against people that have the capacity to put 50% down, and you're a first-time home buyer, so many people made enough offers that they felt like they were just kind of frozen out of the market.
Yeah.
And that was
They went back to renting, those people.
Right.
renewed their leases, moved in with mom, or whatever.
A lot of
And
people.
yeah, there's a huge movement of people that over the pandemic have moved back home because things just got so expensive. And rent is through the roof right now.
It certainly hasn't gotten cheaper.
And it's always going to be going up.
Yeah.
Right.
And that's the thing. I know it's a little cliche to say, but when you think about rent versus buying,
Right.
they always say, even if you're paying a higher interest rate to buy your house, interest on renting is 100%.
Well, yeah, and you're gaining equity by making payments on an appreciating asset.
That's a really good point.
The balance that you owe on the home is working its way down. Is the value of your home slowly working its way up?
So it is it's a win-win.
Right.
And you can't start that snowball of equity,
Right.
Development without buying your home and
Exactly.
beginning that process.
Yeah, and one of the great things about the balance that's kind of coming back to the market is just we do have that opportunity where we're starting to see seller concessions. We're starting to see many more VA loans be accepted, FHA loans be accepted. So some of these kind of, other loan products that weren't just conventional loans be accepted. And we're seeing people go in and getting their first offer accepted right now sometimes.
Yeah.
And that's a really good point. Were you going to say something?
I was just going to say for those people that did have to step away from the home buying process through the last year because their offers were being beat.
Yeah.
Now is the best time for them because, like you said, they're FHA and VA loans, and we can ask for all these concessions. They can do a 3-2-1 buy down. Like, there's so many
Right.
more options for them now.
Well, and it's at least worth taking a look, right? We've
It
heard
is.
so many
Yeah.
people talk about, well, I'm going to wait it out and I'm just going to renew my lease, like you said, Craig, until rates come down or until inventory's up or until whatever it may be.
Yeah.
Right.
I think the people that kind of wait for conditions to be right or for circumstances to be right find themselves waiting a very long time. And it's the same thing whether you're buying a house, you're selling a house, you're making an investment, you're changing careers, getting married, having a kid, whatever it is. When you wait, I mean, you just end up waiting. Really, like you're never going to find the right time. Things aren't always going to be perfect.
Worst case, you go talk to Robert and let him look at your finances, and he's like, okay, yeah, you're right. You probably should wait 6 months, and you should build up your savings. But then maybe at least you know.
Well, and then we've been planning for 6 months.
Yeah, and then you
rather
plan
than
for
you
6
wait
months.
6 months
Exactly.
and then learn the plan.
And it is actually planning.
Right.
Because if you sit down with someone and you kind of break down their scenario and you say, we do have 3 to 6 months here that, we're going to have before you buy your house.
Yeah.
Here's some actionable steps that I recommend you take to put yourself in a better position.
Right. Do X, Y, Z to help boost those credit scores.
Yeah.
And it may take a couple months, but we can check in on you. Make sure you're doing them, and you can call and check in on us. I had someone call the other day. Hey, you gave me this credit plan. I'm really trying to follow it. But what does this mean? So we had the conversation, and the plan
That's so
continues.
great.
Right? And the other aspect is, if you're waiting out all the market or waiting on the market to change enough for you to make offers again, how many other people are doing so as well?
I mean, it's just going to do the opposite. It's just, yes, the interest rates may come back down, but then next thing you know, there's people, everybody else is back in the market, and there's going to be a lot more offers on every house.
Right.
Be a lot more competition, and then you're almost not. It's probably not going to be back to COVID times, but
Right.
it puts yourself back in a more competitive scenario.
Yeah, well, and you remember all those people through 2020, 2021 that were saying, like, I'm going to wait until things slow down because this is crazy, or I don't want to get caught in a bidding war. Hello.
And by the way, their houses are going to continue to appreciate.
Exactly. You wait on the sidelines for rates to drop. Well, the house gets more expensive.
Exactly.
And then all of these other people who are waiting come off the sidelines as well. So we're back to that really competitive market. So I think now's a great time to buy, or it's at least a great time to look. If you're interested or you've thought about buying, there's really no harm in having someone take a look and start game planning with you.
Absolutely. And I think you said something earlier that I believe is really important, and that's that you have a higher chance of getting your offer accepted with some of these alternate loan types.
Yeah.
One of them, excuse me, one of them is FHA. And FHA sometimes has a little bit of a bad rap because it has this connotation associated with it of being like a low quality loan.
Right.
Or what are some of the things you hear about FHA?
I'm kind of in an insular world, and so I don't think bad things about FHA loans. But it can be a little bit trickier in those really competitive times if you are seeing 20 offers on a house. You may lean towards accepting an offer where someone can put 30% down.
Mm-hmm.
Well, one of the big advantages of an FHA loan, right, is that it's one of the lower down payment options. It only requires 3.5%. So a lot of the times we look to get into an FHA loan scenario is, to kind of help people either keep a little bit more in their pocket, or maybe those that don't have 30% to put down on a home. So it opens up the pool of buyers. It allows more people the opportunity to buy.
Absolutely. And FHA is actually a great loan product.
Right.
It, like you said, is meant for people who maybe don't have a ton of cash to throw into a down payment. So 3.5% down is a very affordable down payment, I think.
Absolutely.
There is a stipulation with it, though, right? You can't make a certain amount.
Well, so on
We
an
don't have to
FHA,
get into the weeds.
an FHA loan doesn't necessarily have, income caps. Now, if you were looking at the Section 184 loan, the Native American loan that's kind of through FHA, then some of those other programs could have some caps and things like that on it. But just a regular FHA loan, you won't see an income cap on.
Okay. Yeah. And as an aside, stay tuned for the Native American loans. We're going to have some cool stuff coming up. So we've got FHA. That's a 3.5% down government-backed loan.
Exactly.
We've got conventional, which typically is 5 to 10% down.
Yeah, I would say typically it's a minimum of 5%, but there are some great conventional first-time homebuyer products out there where you can put as little as 3% down on a conventional loan.
Really?
What?
Yep.
Okay.
Did you hear that? First time home buyer?
So you can go as low as 3.
As low as 3.
Interesting. But there's a couple where there's no down payment required.
Absolutely.
So you've got VA loans.
Yep.
and you've got USDA loans.
Yep.
Both are 0% down. Now, please do not confuse that with cash to close, because you still have closing costs.
Exactly.
You just don't have any down payment.
Right.
Now, what was happening in 2020 and 2021 was that because I got a frog in my throat, because FHA loans require a certification, and because VA loans require certification, these were a little harder to get accepted. What you would find is that if you had a house that maybe, it's a great home, but maybe it's got some peeling paint on the exterior, or, a lot of people in 2021 were selling houses with halfway renovated flooring, things like that. Well, if you had pulled up the carpet in your office to put new hardwood floors down and then decided to sell, you can't sell that to someone on an FHA loan unless that flooring is somehow fixed prior to closing. So what you ended up finding was that sellers would default to a conventional loan, or that the agents would recommend they use a conventional loan instead. So Rob, what you're saying is another advantage to shopping right now is these other government-backed programs are easier to get into homes with right now.
Exactly. We're seeing offers get accepted on all loan types right now. So many people think that, I've even heard people recently that think that you still have to put 20% down on a conventional loan to buy a house.
Not the
I heard
case.
someone talking about
Not the
that.
case.
I heard someone talk about that the other day too. I mean, to be honest, it's something that I learned like within the last couple of years, but yeah, only 5, 10, or potentially 3. That's so insane. I can't believe that.
It is.
It's wild. And the last one,
They're really good.
I feel like we should cover it.
Yeah.
Not everyone would qualify for USDA.
Right.
And not every home would qualify for USDA.
Right.
But in a nutshell, what is a USDA loan?
Yeah, USDA loan is a rural development loan, right?
Okay.
And so part of the 0% down is a little bit of an incentive to help people move out of the city centers
Okay.
into some more rural communities.
Gotcha.
Are you laughing at how I'm saying that word?
I'm just glad you're saying
She can't
rural
say
and I'm
it.
not. Or I cannot.
Try it. Yeah.
Rural.
Rural.
That's
Rural.
pretty close.
Can I just say rural?
Yeah.
Rural.
Sure.
Like ruler? I don't
No.
know.
When I lived in Guthrie, we did a ton of USDA loans.
Logan County is a big region for those in Oklahoma, for sure.
Yes. Well, and it's great, and it's one of the reasons that some people make the move out of Oklahoma County
Yep.
into Logan County,
Yep.
is just to get the 0% down USDA financing and lower property taxes and some other things as well. And with USDA, it's worth mentioning that you can actually finance a little more than the loan amount, right?
Yeah, exactly. It can technically go up to 102% financing.
So anyway, worth mentioning, but
Logan County's getting really popular.
Logan County's blowing up.
It is. I've helped 3 or 4 families recently move to the Guthrie area.
I just heard of Roush Coleman's going to do a whole new development up there.
Nice.
And it's going to be
Yeah.
a lot of new homes.
Opportunity.
A lot of opportunity. And then, on the east side and on the west side, they've got new communities going in over there. There's a lot. In fact, I was breaking down the numbers in Guthrie. They've got like 130 some homes for sale right now.
Wow.
Which is, it's
A
wild.
lot of them are new construction.
And that's the
Yeah.
thing. When you look at the MLS stats for the month of October, you see like some sharp decreases and increases depending on what you're looking at. And I was like, what is going on here? So to kind of break it down some more, and it's just because some of these builders just flooded the market with new listings, so it kind of made everything water.
Right.
But, anyway, I digress. So now is a good time to buy. That's what I'm hearing.
It's a great time to buy. It's always a great time to buy. It's kind of like the old adage, well, when's the best time to plant a tree?
Well, now.
Well, the best time would have been 5 years ago.
Oh.
But the second best time,
Scrolling on a
but the second best time is today.
I got what you're saying. I'm usually
You're
the king of
quotes.
Man, I have never heard that one. I love
Yeah.
that.
So yeah, I mean, it's a great time to buy. And again, to me, it just all comes back to if the monthly payment fits your budget and fits your needs, buy the house.
Yeah. And that's it, right? Because it doesn't matter what anyone else is doing.
Right.
It doesn't matter what anyone else is saying or what you hear on the news. If your family is ready to upgrade or to downsize or right size or just own a home,
Yep.
and it makes sense for you, then do it.
That's exactly right.
Or if you need to,
Or if you
don't
need to.
freak out.
Yeah,
There's options.
Don't
It's
be
okay. And, you know, on the long-term time horizon, maybe it's 6 months, maybe it's next spring, maybe it's 2 years from now. But ultimately, the projections are that rates should fall. No crystal ball. Don't quote me on anything. But projections are that they should come down. And if they do come down, you're already in, you know, a comfortable range monthly. Then you have that opportunity to refinance at a lower rate and save even more.
Yeah, your payment will be lower.
Right.
There we go. Okay. Strategies to help you win in a higher interest rate environment. Rob, thank you so much for coming on, man. This has been a bunch of gold.
Thanks for having me, Craig.
Yeah, Robert. Sorry. Merle's looking at me. I can
Does
feel
anybody call you
her.
Rob other than him?
A lot of people call me Rob.
Okay.
All my family calls me Rob. All my wife's family
I
calls
don't
me
know why I
Rob.
feel so wrong when he calls you
It's okay, I promise. Being a Robert, you know, you get called all kinds of things.
Yeah.
Robbie.
Rob. Ooh,
Exactly.
I wouldn't go there. I wouldn't go
I got the eyes.
there.
You know, Robert or Rob are the two preferred. But I've even had a Bobby thrown at me before.
Bobby?
Yeah.
Who was
What a
ballsy
cousin.
enough to go, hey, Bobby?
One of my co-managers at the country
Oh,
club.
oh, never mind.
We were good buddies. It was okay.
All right,
So
guys.
if someone was wanting to talk with you and get an idea of what these programs are, how they work for them, interest rates, things like that, how does someone get in touch with you?
Well, I think a great way is to get the buyer's guide from the KIRIO House team.
Ding!
I'll send it to you.
And then I think,
Let me know.
you know, if you're watching this video, listening to the podcast, especially if you're watching on YouTube, Craig's going to put a link right down here. It'll take you directly to the website, has phone number, has a spot where you can apply online. And then the office phone number, right? It's 405-751-3800.
I love that.
You see that? See that
No.
pop up against the or on the bottom of the screen there?
Yeah, right.
So, guys, thank you so much. If you made it to the end of this video, it's been like 40 minutes. Thank you so much for sticking around. I really hope that you guys got a lot of value out of this. Merle and I really appreciate it. And Rob, we're thankful for you coming on and sharing all this stuff with us. It really means a lot. And, you know, having a team like we've got really does, it means something, not just for us, but for our clients. And, you know, we were talking earlier about our breakfast club.
Yeah.
And it's an amazing thing. And it's fun just getting together with you, and Mercedes and I are able to talk to you about what's going on in the market. We talk about some of our clients that we're working on together. And then we've got a few other people that come as well. You know, we've got Aaron Lassiter from MVP Pest.
Yep.
We've got Tanner from Axe 29 Roofing and Solar. We've got Sean Taylor from Inspect One Home Services.
Yep.
And that's kind of like our little group. You know, we're able to get together and spitball things, all so that we're able to provide better and more unique solutions for our clients and put our clients at an advantage. So,
And we
Absolutely.
kind of all like each other too.
Yeah, exactly.
But all right, guys. Well, hey, thanks again so much. We really appreciate it. We will see you on the next episode. And if there's anything that we can do for you or Rob can do, don't hesitate to reach out. We are always available. See ya.
Bye.
Peace.
Thanks, Craig.
Out. Round 2 in the books.
Okay, double check it.